Hi, everybody. Just wanted to come to you today. Thank you for your time. I really appreciate you checking in. Today, we're going to talk a little bit around the benefits and difference between working with a broker and working with a bank. But we're also going to talk a little bit around self-employed people and self-employed clients that I work with, because a lot of times they're hearing things that they don't qualify or that they don't make enough money. So I thought, today I'd just pop on. We'll do a couple of things and then we'll just head off for our evening. So most Canadians are still walking into their banks when it comes to renewals or doing mortgages because that's the area that feels safe for them. It's familiar and it's easy. But what if staying with your bank is going to cost you actually a little bit more? You're not going to have the flexibility, the opportunities, or long-term financing strategies if you just stayed with your bank. If you looked at different options and you came to a broker like myself, and I'm not saying banks are not a good place, not saying that at all. They do a great job with many different things. But when you're working with someone like myself that's a broker and a consultant, um, you can actually have more flexibility in what your choices are that you want to do with your mortgage at the time of purchasing a new home, whether you're renewing your mortgage, whether you're looking at restructuring debts, or you're looking at restructuring your current mortgage because you want to do some renos on your home. There's different opportunities that I have with having so many different lenders that I can reach out to. I've got around 50 different lenders that I work with, and those are lenders from big banks to lenders that are alternate solutions for lending that will work for long-term, short-time goals. We also have private lenders that I work for. So there's so many different avenues and flexibilities that you get with a mortgage broker that you don't get with a bank. And when I say that, again, banks are great. They have great products, but they only have their own products that they can provide a solution for you. Whereas when you're working with a broker, you can have the flexibility of me being able to go and search for the best solution for you. Sometimes it's rate, sometimes it's the flexibility that you need, and sometimes it's just to get that long-term financial strategy that you need to work with. And it's not a forever. Sometimes when we go to some lenders, it's a short term to get things sorted out for you, to get you into what you need currently, so that we can look again in a year or two to get you back into a different strategy that may cost you a bit less, but initially it gets you what you need and where you're going. So when we talk about that, I talk about it through all broad spectrums of different family structures, business structures, new to Canada, all kinds of different kinds of clients that I work with. Whether you're multi-homeowner, whether you're building construction buildings, whether you're doing large projects, small projects, I work with all kinds of different people. And that's the beauty of the flexibility that I can do. And also the team that I work with. If I don't have the right solution for you, I can reach out to my commercial teams. I can reach out to different lenders and solutions and financial people that we can put our heads together to come up with the right decision and solution for you. So, if you're self-employed, or you're commission-based employee, or if you've your own business owner, you may have already heard the words, sorry, but you don't qualify. And a lot of times you feel like that's the door shut when you don't qualify. And that's no, you don't qualify at whatever financial institution or lending solution that you've walked into. You don't qualify with them. Today, we're going to talk about what happens when you hear those words. Lenders aren't really looking for a way to be creative on how we structure your deal so that you can get into your goal of what you're trying to purchase, what you're trying to build. How I work with people and working with a mortgage broker. So I'm just going to sit back a little bit and I'm going to talk to you a little bit about what I hear Canadians are feeling. What I hear whether it's Canadians with their personal finances, whether it's business clients, many Canadians right now are facing mortgage payment shock at renewals. And that's because in 2026, the rates are a lot higher. They're feeling like, oh my goodness, I've gone from a rate where I can live and breathe and do everything that I need to do, both for myself and my family and my health and wellness, because we don't want to just be going to work every day, coming home and sitting in our house, and then sitting and thinking about how am I going to make my next payment on my car? How am I going to get food in my house? I've got a child that has some activities coming up at school or outside of school. You know, I was doing just fine, but now my mortgage payments, holy smokes, for lack of a better word, are going up to double and sometimes triple of what we were a month ago when we're sitting at renewal. So how do we take that stress away and rebuild and restructure your lives so that you can carry on and sleep at night and just feel really good about what you're doing? Often mortgage brokers have access to dozens of lending options versus just one institution. And you've heard me talk about this in the past with this session, as well as other sessions. It's not that I stop at one lender and go, well, this is the only solution for you. I will look at multiple lenders to find the right solution for you that's going to meet your needs. My commitment, my obligation is to you. And that's what I really want you to understand. My passion that I do this for is for every single client that I work with. My heart is making sure that you are well looked after. I am working for you. I am not working for a financial institution or an alternate solution. I'm not working to make sure they're happy. I'm working to make sure you, as my client, is happy. You can sleep at night. You are confident in what you've done moving forward, and you really feel good about these decisions. And I'm here for questions. And any question you got, I'm happy to answer it. Because if you've got that question, somebody else might have that question too. And if you're asking me those questions, I also will look at building them into podcasts so that I can help many other people that have not had the opportunity to reach out to me, or sometimes people are just afraid to ask those questions. So I openly welcome any questions. Even if we are currently not working together on a client relationship, I'm here to answer those questions. I'm here to help you through those steps in life for you. When we look at fixed rate mortgages versus a variable rate mortgage, and we look at different interest rate differential penalties that clients do not discover until their life has changed and happened, that's when, a good time again is to reach out to me, because there is a lot of times that a fixed rate mortgage, you've got a life event and you need to break that mortgage because something needs restructured in that. And with that comes a large penalty. And working with me can help you not mitigate that penalty or wipe it right out, but I can help you how to restructure and build that penalty so that it's not cash coming out of your pocket right now. And sometimes it is the right decision with what's going on in life and a situation that's happened. It could be a health situation. It could be you've lost work and there's only one income in the house. It could be a marital or a relationship breakdown. And you need to restructure your mortgage so that you can move forward and be satisfied and happy and healthy. And those life changes can be expensive, absolutely. And, penalties can't be waived. You cannot walk into any financial institution. You can't walk into me and say, I need that penalty waived. We can't waive those penalties because the money has already been spent from the financial institution or the lending solution provider that you have borrow that money from. They've had to already pay that money, put it out to you. It costs them money to do that. So, absolutely, if you were to take that money out of your pocket and somebody came to you later and said, "Hey, I need to restructure what I've done," you're going to want to recoup some of that money. So, it is perfectly normal for these penalties to be put in place. It's not somebody trying to take advantage of you. It's not somebody trying to hit you at a hard time when you're already down. It is a cost of doing business. But that cost of doing business can be looked at differently to restructure so that you come out ahead as well as your provider with that mortgage is recouping what they need to recoup to mitigate their losses. So just something to remember. I know I hear and we get upset, like, everybody makes so much money. Why do they have to charge us these penalties? Well, it's costing them money to lend us that money. So each and every one of us, doesn't matter who we are, if we break a fixed rate mortgage, we know going in, or we should know if you've been educated and advised correctly, that there is a penalty to get out of it. And the further along you are in that fixed rate mortgage, whether it's 3 years, 4 years, 5 years, whatever, the less amount of a penalty you have to pay. But be prepared for that and don't skirt away from it if you have a life event happening. Let's talk about it. Let's make it work where it's palatable. Want to talk a little bit about qualification rules and documentations required. They've tightened significantly, especially for self-employed clients. With self-employed clients, if you haven't been in business for 2 years, it's really hard to get that lending. It's not impossible, but it's very hard to get that lending. We've still got, when we're looking at mortgages especially, there's still stress tests that need to be done. So if you've got an interest rate that is 4.19, the stress test to the government regulatory pieces are saying that you have to add 2% onto that. So you actually have to qualify at a higher rate. And these rules have been put in place to protect us as the consumer, as well as the lending facilities and lending areas, is because they're taking a risk to lend us that money, and they are also being sure, the same as the government's being sure, that when rates change, or should rate change, are we putting our clients in the best position to be able to make a payment at renewal at a higher interest rate potentially. So, when we look at it, it might cost you, it's going to look like it's going to cost you more on a monthly or biweekly payment or weekly payment than it's actually going to cost you when we do these stress tests, but it's going to set you up for success down the road if mortgage rates continue to climb. We don't know. None of us have a crystal ball. Wish we did. I'd be a millionaire if I had that crystal ball, but we all have to go on that factor of the what if. And it's our job to make sure that you are put in a position to be successful come time for renewals. The other thing with self-employed clients is a lot of times when you're doing your taxes, you have so many write-offs that it doesn't look like you're making 100,000, 100+ thousand, where you really actually are. So yes, we do look at the notice of assessments, but we also look at the bank statements. We will take your bank statements and look at your cash flow that way and try and work with you to get you approved on that cash flow, or what your deposits are monthly from your payments from your people you do work for. I'll give you an example of a situation where I had a self-employed person who had only been in business for 18 months. When you looked at the cash flow and you looked at their bank statements, their revolving cash through that bank statement in every month was upwards towards $25,000 a month. Now, when you take that and they have to, pay themselves, pay employees, they have to pay for their vehicles, they've got tools to pay, they've got contractors that they have to pay, they've got suppliers that they have to pay. And when you take all that away, that money you look at and you go, wow, they're making really good money. However, their notice of assessment is only looking like they make 80,000 a year. And that's because that's what we need to report because of everything that is being paid out. But when you look at what their cash flow is in the bank accounts, they can afford that $900,000 home. On paper in the system, no. When you look at what their cash flow is through bank statements, absolutely. And that is where, as a mortgage broker, I can work with that with self-employed clients. I can do cash ups on it. I can do gross ups on it. And the individual that I'm talking about needed to go into a larger home to fit their family and was kept hitting, no, you can't do it. No, you can't do it. I was able to do that for her after she'd been in business for 18 months. I was able to get them into the home of their dreams that fit the family lifestyle and the number of bedrooms they needed for everybody to be comfortable and a larger square footage. And I had to go through an alternate solution, lending solution, for 12 months so that as she continued to grow her business and worked with her accountant on how she needed to structure things differently, when it came up for renewal this year in 2026, we were able to relook at that, work with not just her financial statements every month, but also to work with their a notice of assessments. And we were able to get them moved from an alternate lending solutions into one of the top 5 banks. Made a significant difference in her cash flow and her payments. She was going along, they were going along just fine, month to month, being able to manage the payments. But it took a lot off of their shoulders when we were able to bring it down by almost 2% with the interest rate. So that's why I say, don't always look at interest rates. Look at the short-term solution that's going to give you that long-term gain. So that's a success story that I feel really, really proud of. I think that's powerful to say that, it's not in that cookie cutter box. You have to have 2 years. You have to have your notice of assessments that are showing that you're making 150, 200,000 a year. You have to have your bank statements that also show that. You have to have your credit rating that's really strong. Well, you know what? There's a lot of things we can work around and work through because again, life happens. And people that are business owners, they work so hard to build their business. They also deserve to be able to build their home and their life for their family. So I'm always very happy when I can sit down with a business owner and we can sit at the table or across the Zoom and we can just sit and talk about what their goals are. I get all their documents. I sit down and I structure what they need and I go back to them. And a lot of times I'll go back to them with 2 or 3 different solutions. Sometimes I only have one solution for them. And I'll go back and say, this is all we've got. These are the reasons why this is all we've got. Let's make it work. Qualifications when I'm asking for documents or I'm asking for explanations on things. As a mortgage broker, it's because I want to do what's best for you. So as we talk through all of this and we look at it, I will say to you, a strong mortgage strategy should provide you flexibility. not just security in the lowest rate. So let's talk a little bit before we wrap up today, and let's talk a little bit about um, people's lives. People's lives are busy. Life is hectic. And when you go in and you talk to your financial institutions and you talk to your lenders, whether it's a renewal or it's a new lending solution for whatever you're doing, construction builds, anything like that, housing, home ownership, whatever. Sometimes it's just easier to sit down and sign because you're comfortable with that institution or you're comfortable with that individual that you're working with. And that's not always the easiest thing to do, and it's not always the best solution to do. A lot of times you never realize that when you're just walking in and signing, there are so many different and better solutions that are available just by having that open conversation with someone like myself. Sometimes you can get better rates elsewhere. Sometimes, as I talked about before, the structure of the penalty can look a little bit different than having to pay that, I don't know, 10, 15, 20, 30,000 plus penalty to break your mortgage. There's better financing flexibility. You have opportunities to consolidate debt. Your monthly cash flow can improve significantly just by having that conversation. Things to consider when we're talking around working with a mortgage broker. Some of the things, it's not just that we submit paperwork. We help structure the story. I work with stated income programs. I work with alternative lending solutions, income restructure strategies, debt consolidations to improve your debt service ratios, credit rebuilding strategies, sometimes using the spouse's income effectively is needed, and I work with that. I sit down and we do very strategic mortgage planning before your renewal or your purchase so that when you go in confident, you go in clear, and you go in educated. And those are the things that are really, really important to me. So let's talk a little bit now again about the relationship with myself versus the rate. And you've heard me talk a lot that rate isn't always the best option. When we look at relationship, I can help you with future planning. What are your goals? What is your next step? Maybe you want to buy a second home. Maybe you want to go into another business. Maybe you want to buy a vacation home. So I want to talk a little bit deeper into what is the difference between a bank employee who works for one bank and a mortgage broker who works for you. Again, the natural flow of this is when you walk into your bank, they are working to do the best for you. They're working to provide you with that advice and that solution. But sometimes their hands are tied, and it's not because that employee wants their hands to be tied. It's because they really don't have the options outside of what their financial institution can offer. Whereas when you're working with a broker as myself, my hands are not tied. I work for you. You are my client. I will work for you and go to multiple lenders to find a solution for you. And sometimes that includes major banks. I absolutely have access to work with some of the major top running banks. I also work with model lenders. I work with credit unions, and I work with very many alternate lending solutions. And I do this all for you at no cost for you. I will do all of the research. I will do all of the digging. I will come back to you with some solutions that will work for you. And you do not pay me. I actually get paid by the lenders that I work with. There is still cost for you, absolutely no different than a financial institution. There will be, there'll be potential appraisal costs. You're going to have some legal fees. You're going to have property tax, title changes, all of that kind of stuff, which is your normal cost. But you're not paying me as your broker and your advisor. You're not paying me a separate amount of money. That comes from the lenders and the solutions that I come prepared to provide you with. So when you look at your mortgages, and a lot of people say, well, the rates are so high with that lending option. I don't want to go with them. Sometimes we do need to go with a little bit higher rate for the time being because it's the right solution for you. It gives you flexibilities, it gives you cash flow, it allows you for future planning, and it also gives you long-term financial wellness because sometimes when clients come to me, I've had clients come to me that they're at the ends of their rope. They've got a lot of debt that's been built up. There's been situations in their life that have been to no fault of their own that have caused them additional expenses and stresses, and they're strapped. They're cash poor, but they have a home that they have equity in. And we can leverage that equity in that home and structure it so that you have the flexibility as you free up this cash flow to pay down your mortgage quicker. You are saving a lot of money because there could be credit debt that's out there that you're paying 21, 22, 23, 24% because you've just not been able to make all your payments on time. Whereas you could get yourself into using the equity in your home. And again, I say it's not forever, it's for now. You have the ability to double up your payments. You have the ability to save and put large down payments down and be able to pay that back down and shorten your amortization. But it's also allowing you, instead of paying 19, 20, 21% interest, you can pay anywhere from, if your credit's still good and you're just cash flow, you can go anywhere currently right now. And I don't want to quote rates and say this is what it's going to be because rates are a moving target. But you're looking anywhere, you could be in the mid 4% up to 6 or 7%, maybe a little bit higher. And that's where I say, I will not say to you it's going to be exactly this because everybody is needing a different structure that's tailored exactly to who you are, exactly what your needs are. And that may look very different than a person down the road or a different business structure that's down the road. So all I'm saying is be open to those conversations. Don't get yourself stuck on rate because rate is not always your best solution. You may get a mortgage renewal or a new mortgage or a construction mortgage that your rate is really, really good. But by the time you've gotten into your home, you've had to use other means of debt servicing to allow you to fulfill some of the things that you're looking to do while you're getting into this home. And now you've got yourself maxed out on all your other revolving credits and paying the minimum on those revolving credits. You're never going to get ahead of the game. So that's why I say, be open to those conversations. Come with an open mind. And, it doesn't have to be done today when we're sitting down and talking. Yeah, I give you opportunities to take away, think about it, we touch point and talk about what your concerns are. I will lay it out on paper for you, options 1, option 2, option 3, so that you can really make an educated decision of what's going to work for you, why it's going to work for you, and how we're going to continue down this path and road together so that you do have a long-term financial wellness with everything that you're doing. It can be completely different and change the outcome is what I talked about. The ability for me to do some research for you and find the right solution and be creative at how we make this work for you. So again, everybody, I'm Rhonda Calder-Dixon. I am a mortgage consultant. I'm also a financial educator. I work in very many different ways with my clients. I'm deeply passionate about helping people making confident financial decisions without any pressure, without any judgment. And today's conversation is what matters because this market is changing. And you've heard me say that week over week over week. Markets are changing, mortgage rules have tightened, qualifications stress is real. There used to be a day that we could walk in and think, well, we're going to qualify. There's nothing to think about. We've got everything in place. Today, that's not always true. We have to think of different ways for us to qualify. And many Canadians are simply signing renewal documents without understanding their options. They're talking to their bank and their bank's giving them that solution. And it's not always renewals. There's so many. I'm out in the Fraser Valley area. I do work with all of clients across BC, clients across Alberta, Saskatchewan, Canadian wide. I can find solutions because of all the networking channels that I have. And it's not always just that renewal structure, and it's not always just single family homeowners that are hearing they don't qualify for today. I work with farms that are looking to build outbuildings. I work with clients that are building, multi-level, multi-family homes. And a lot of times they're taking a property that is a really good sized property that they don't need that half acre. They don't need those 3 acres for themselves anymore. They don't have a hobby farm, but they still want to remain in the same area that they are. So we're looking at subdividing and we're looking at building multiple homes after they subdivide so that we can house more families, but also build a legacy for yourself in the property that you love and have spent so many years in and wanting to stay there. And sometimes, too, it's not always your property, but you found this dream property that you love and you really don't need all that space. Again, we look at getting you into that property, getting you the lending solutions and the planning so that you can restructure the home or reno the home that you're looking to live in. And then again, looking to subdivide and building different home options on your other parts of your property.